Hi everyone, I'm Adam Szypula of the JMRD Watson Wealth Management team. I'm an investment analyst on the team, and I wanted to have a quick video chat on just what midterm elections historically have meant for markets, clarify a bit about what we can expect. It's the evening of November the 8th. I'm not calling from a bunker, but daylight savings time means it's getting dark at 5 o'clock. So let's jump into what we can expect tonight. First off, if you've been following along in the news, you've likely heard that they are expecting the incumbent Democratic Party to lose some seats. This is very much within historical norm. As you can see, by the time midterm elections roll around, the incumbent party tends to have to pay the piper, I guess, in terms of what was promised on the campaign trail versus what's been delivered halfway into the presidential term. So losing seats, this is very typical, and this is something that's to be expected. This next graph here shows that volatility in midterm years tends to be a bit higher than non-midterm election years. Obviously, this year we've been experiencing plenty of volatility related to inflation, rising interest rates, but for this table in particular, it really just highlights that markets don't like uncertainty, and not knowing who is going to be in charge of leading the world's largest economy in the U.S. and what political decision making is going to look like there leads to some heightened volatility. However, is this something that we should be concerned about or worried about? And historically, the answer has been no. When we look at the S&P 500 a year out from when the midterm election took place, it's a perfect 18-0 in terms of being higher. Obviously, historical performance can't be guaranteed in the future, but it's certainly a positive trend, and it just highlights the level of uncertainty in markets and how once there's a clear picture in terms of who's going to be in charge of which house of government, that is a big relief for markets, and there historically have been 18 rallies after that. This next slide here just shows that regardless of who's in power in terms of party or president, investing in politics tend not to mix well. As you can see, regardless of party, president, US markets have compounded wealth at a phenomenal rate. So I thought that this was just a useful chart to show that hopefully will put your mind at ease a little. And then just a quick caveat from the White Stripes. Effect and Cause is a great song off their Icky Thump album. And I thought that the lyrics of the song really tied into just the stock market and the political environment in the US. Depending on the election year, where the economy is at and the state of the economy will be higher or lower on voters' minds. But it is something that voters are mindful of, and obviously their votes are to elect individuals who will be responsible for shaping the economy. So stock markets and the economy and who's elected into power, it's a weird effect cause relationship where both are kind of influencing one another. So rather than reading into it too much, just have an understanding that as shown before, kind of regardless of who's in power, markets have done a very good job of compounding wealth and rewarding investors for the uncertainty. So that's it for this video. We hope you enjoyed it. We'll be shooting a lot more of these as the fall and winter progresses. If there's any topics that you'd like to hear about, please get in touch and we're happy to discuss them. Otherwise, if you have any questions, feel free to get in touch with someone on our team, and I'll wish you a great day. Thanks for the time.